Hello and welcome back to this Tuesday on Crypt. Oh my God, we got Bitcoin going up and it's feeling pretty good for now. And I have a lot of things to cover in relationship to gold and Bitcoin, as well as some Ethereum updates. Let's hop right in. Boom. Now, there's been a lot of trepidation and fear around the price of Bitcoin. Obviously, gold's been exploding. That's no surprise to anyone, hitting all-time highs day after day. But what is up with good old digital gold? And while some of those negative thoughts are thawing as we break 112, honestly, when I started assembling today's messaging, it was at 113. So that's pretty groovy. And we're seeing some standard retesting of the bounds, right? Hopefully we can continue to see some growth. Now, one of the realities, and this is coming from Mr. Presentable with this chart, is that we're looking at Bitcoin following gold. And we can see these sort of trajectories coming in the past, where gold enters a rallying phase just before a Bitcoin rally itself. And some of those funds move from gold into Bitcoin. We've seen this in the past in 2016 and 2020. And now, of course, we're seeing this massive rally in gold going into, well, present day. So the thesis here is that this wild aggressive gold spike, which is largely motivated by China, will take some of its gains and move into Bitcoin for a higher priced Bitcoin. Now, is that going to happen within 2025? It's hard to say. There's a lot of talk about the expansion of the 4-year cycle into a 5-year cycle, sort of a maturity effect, but a business cycle nonetheless. Now, one interesting thing to note from John Charbonneau, for context on scale, gold's 6% drop today erases nearly 2 trillion of market cap. That's nearly an entire Bitcoin market cap. So look, China's buying gold like crazy because the US dollar is looking sus. I mean, we've got the tariff battles, we've got Agent Orange in charge just kind of exuding insecurity. And well, that's what the dollar is really there for. It's to be a secure asset. So he obviously wants the dollar to be devalued. This is good for real estate holders. And of course, the Don is a big real estate guy. Keep in mind, a cheaper dollar, a less powerful dollar means we have lower interest rates, which means more people borrow money to buy large assets like real estate. So there is a reason why this is all kind of happening, but at the same time, we're also in the midst of a variety of calamity, which I think just leaves a lot of people scratching their heads and not knowing what to expect for tomorrow, hence a flight to a safe asset. Now, I did see this interesting take from Danny Krypton, which is breaking an insider with a 100% win rate, just opened BTC and ETH longs worth 255 million ahead of the Fed meeting today. He definitely knows something. A 100% hit rate, pretty sus. And of course, we've been seeing a lot of crime on chain lately. And if you want to see it, I mean, it's right here, right? We have the wallet account, which opened up these longs recently, currently an unrealized profit and loss of $4 million, but here they sit, right? The Bitcoin 15x long, the Ethereum 5x long, with Bitcoin really being the majority of the rewards happening out of this. But this account is telling us things ahead of time, and we've seen just a lot of what looks like insider trading, so, fingers crossed on this narrative. Now, leaving the Bitcoin and the gold thesis behind, let's move on to some of the drama inside of the broader cryptocurrency industry, which is focused on Ethereum right now. So it came out that, look, one of the lead engineers for the Ethereum Foundation has been paid $105,000 a year pre-tax with no benefits, no raises, and no incentives. Now, pre-tax, I mean, let's take off 20 to 30% of that amount, depending on where they live. This is under the poverty line, which is defined as $200K right now. So the community is responded to this as dude, how are we supposed to be so bullish when you're being so cheap to these people? And of course, we must keep in mind the Ethereum Foundation's a nonprofit. And I think Anatoly from Solana had a great take on it that was you got to be bullish on Vitalik if you can retain talent for that low of a pay. But the reality is, look, if you do work at the Ethereum Foundation, you can probably go to any of these for-profit companies afterwards. But the reason this has kind of come up in discussion is, and I spoke about this earlier, that Dankrad Feist, one of the lead researchers in Ethereum, well, he's leaving the Ethereum Foundation and he's joining Tempo. And this is moving us into sort of a new paradigm of crypto right now. In previous cycles, stablecoins, and let's recall, the original stablecoins like DAI and earlier things, they were pursuing decentralization. How do we create a stable asset that is not directly pegged to the dollar by, buying a dollar and doing a one-to-one issuance? Well, we're moving on from that. And Stuti from Kraken Ventures, and of course, Carnegie Mellon University, she comes out with a very relevant relevant thread here, which I think is totally worth listening to if you want to download a little bit of content on this. It's not very long and it's very clear. But she's talking about the old trilemma, right? Back in the day, from the 2018 to 2022 period, we have this stablecoin trilemma of stability, decentralization, capital efficiency. And what they wanted to do was maintain the peg while being wildly decentralized. And of course, you needed stability. So these are all very valid things in a stablecoin, which is that it is stable. It maintains its peg of 1-to-1. It's fully decentralized. Nobody can fuck with it. And of course, capital efficiency is you want to put this thing to work. It needs to work well. However, we're going into this new trilemma, which is yield, risk, capital stability. The reality is that things like Tempo are forfeiting decentralization for the speed, for the utility, for the higher throughput. And this is something that we're seeing kind of across the board. People are realizing that stablecoins are a killer application. And there's been a long-term thesis that any product that really finds product market fit will ultimately want its own app chain or its own L1. Why have rules in place around how you're going to operate your business when you could just launch a new protocol in which you can not only control the parameters, but a lot of those profits flow back to you? So this is a very interesting thought. And of course, Tempo is going to be an absolute powerhouse. And there's not just Tempo. We also have Plasma coming out of Tether. And let's remember, Tether's releasing USDTA, which is the US version that is compliant with the Genius bill. And word on the street is we're going to see a BUIDL-like fund around that asset. Keep in mind, BUIDL is a BlackRock tokenized fund by Securitize. In the beginning, I didn't think it was all that interesting. You're like, you took a fund, sure, you put it on the digital ledger. But what we are seeing now is that that BUIDL fund actually generates real yield from RWA assets. And in the beginning, it was like, okay, institutions could accept this. But then we start to see Athena and USDE tapping into the BUIDL fund, getting their yield. And unlike a stablecoin issuer that uses T-bills, right? They buy dollars, they put it into treasuries. They're not allowed to share that yield, even though we're getting around it now by calling it rewards instead of yield. But something like the BUIDL fund that generates real yield can flow back into protocols. And now that yield is flowing into other protocolized assets and users and retail. I mean, this is really why the BUIDL fund seemed weird. It was like, okay, this is institutional interest, but now retail can buy USDE and they can hold a stable asset while generating better yield than the banks. And of course, they can put that to work in DeFi protocols on any of the virtual machines. So this is actually proving sort of the building grounds for how do you take a robust basket of RWA assets and through steps and functions, open up its yield capabilities and spread that throughout other applications. That is where our use case kicks the bank's asses. And quite simply put, when people and broader organizations start to say, hey, we want that yield and they access it, this is an amazing onboarding opportunity. They begin to use crypto. They begin to look at how easy it is and how the functionality is just simple, always on, and consistent and trustworthy. I mean, I had to write a check earlier this week. I don't have any. I had to go to the bank to get a check. I had to write the full amount on the check. I mean, it was just like wild. You're like, what is this world that we're living in? Now, a beneficial take in Ethereum's greater narrative, as we do kind of fight back on some of the drama this week, is just look, Celo and Ronin just demonstrated why every alt L1 might eventually become an L2. So these are two of what used to be Ethereum killers. Celo is meant to be a high scale, low fee chain that allows people to basically move money cheap. Ronin was meant for video games. They're like, we don't need the security, but we want every game element to be on chain. So Celo shut down 110 validators and cut security costs by 99.8% from 6.9 million a year to just 13,200. And that's because Celo had to generate more inflationary Celo to pay those validators. That's how it works, right? They're securing the network and they earn the native token. Now the network can just pay the Ethereum gas fees to secure its state, basically a recording of everything that happened in, an epoch period n to n+1, and they just pay the gas fees to put that into the Ethereum blockchain, and boom, they can rebuild their state historically whenever they feel like it. Ronin just paid out 35 million in staking rewards since 2023 just to maintain their L1. So this is a lot of value that they have to inflate away to maintain the chain. Now, redirecting those funds to developers who can actually drive revenue. They're processing 350,000 daily active addresses across 100 games with transaction activity higher than during Axie Infinity's, their lead product, 2.8 million user peak in 2022. The blob capacity is increasing 8x with the Fusaka upgrade. The founder of Ronin put it best: all EVM L1s are future L2s. So there is a very strong bull case coming back to Ethereum as they figure this out. Now, I do think Ethereum does need to figure out how to unify these L2s. It is an absolutely atrocious experience for anyone who tries to generate yield on one L2 and then access an application on another. I mean, you got to go through bridging. You got to pay gas fees all over the place. It's like absolutely grotesque. If you're going to be doing six-figure transactions, generate yield on lots of money, okay, it's like acceptable. It's easy to do. But when you use Solana and you just sign on and it just kind of fucking works, it's like the Apple thesis. Now, lastly, on the bullishness of Ethereum, of course, you have EigenLayer, one of Ethereum's largest projects. And what EigenLayer does is it allows other people to lease the security of Ethereum for their applications. They can kind of build what you can think of as like a mini blockchain on EigenLayer, and they can set their own rules and parameters, but they're really linking back to Ethereum for their own security. So what's really cool is today with Syndicate.io, we're launching AVS sequencer networks. And the sequencer is what is fundamentally processing transactions in any Ethereum L2. The trade-off is the sequencers are not decentralized. They're all centralized and they're run by an organization. And they make, again, an epoch of transactions from n to n+1. And then as a single transaction, they send that whole state back to the Ethereum L1. So this way, it offloads a lot of the activity from the L1, making it cheaper, making processing easier, really load balancing, right? And we don't need as much trust in these sequencers on the L2 because at the end of the day, the L1 is providing the security. So this is really fun. Building a sequencer is hard. This does mean that anybody, like a smaller application, a smaller business, doesn't need to build out this giant, robust tech team. And if they do this, it's programmable, decentralized sequencer networks secured by a native token, staking, and fully compatible with the Optimism stack, Arbitrum, Nitro, and more. So this means that if you build an L2 with one of these sequencers, you actually have interoperability with Optimism, with Arbitrum. What I was just complaining about was like that bridging and moving between ecosystems that you don't have with Solana because it's horizontal and composable. This is actually going to act as a composability layer. So this is obviously for anyone new that's building something, but this does mean that if you want to launch on ETH and you want to build a new product, you will be able to interop with a lot of the existing product that already exists there. So this is pretty cool. And of course, you're going to have Stripe, which is an EVM compatible chain as well, and it's going to be moving tons of dollars. So we do just see the Ethereum ecosystem growing entirely. And I think this is actually extremely exciting, and we should just be pounding the pavement on this because any glue that connects these L2s is so desperately needed for the user experience. There's a whole slew of reasons why it's good for decentralization and scaling and all that, but the user experience is just hot garbage. It's hot garbage. And we want to see that become smooth and easy because at the end of the day, when we onboard people to crypto, they are going to look at the banking world and say, man, this is like sending faxes versus sending an email. Why are we still doing this? Why have we not moved on? Now, that being said, there's plenty more news coming out. I had to like pick and choose in order to not be overwhelming. And I think this was pretty meaty regardless. But we keep seeing mad leverage liquidations events. Like it's almost every day. So please, I beg of thee, do not over lever. Stay safe. Give me a like and a follow if you want me to keep going. And as always, I'll see you tomorrow.